All right. Good morning, ladies and gentlemen. Today is Wednesday, February 26th, 2020, and I'm back with another Wednesday edition of the live show. And boy, what a week it's been since last week, right? Pretty amazing sort of sell off that we've had here. And what I wanted to look at, first of all, was the S&P and check it out. So, 1 week ago today was the all-time high right there. All-time high in the S&P. And the funny thing is that boy that little rally right there that we saw from this low right here up to that basically was kind of unusual in that we had this sell off here. This is when the coronavirus fears kind of shook the market a little bit. We got what, like a little 3% dip here, and then the market rallied back up, kind of shrugging it off. And then, as they say, risk happens fast, and we all know what's happened the past few days, right? We came in on Monday morning to a huge gap down. It was biggest gap down I think that we've seen. Jeez, I don't know. I mean, I'd have to go back to like the end of 2018 between October and December to see if there was any gap downs that big. I don't even know, but anyway, extremely significant gap down. And on Monday I drew this support line here under obviously that low, which made a lot of sense. Check it out, this trend line right here. I've moved this trend line a few times. Initially, I had it, a lot tighter up here, and then we got this little sell off, and so I figured that, and so I sort of adjusted it lower, and at one point I think I had it under this low, but anyway, it kind of made sense to put that trend line right there because that's basically, we've talked about this multiple times each week. This is when the rally really kicked off, right? Beginning of October. And this was the breakout here. By the way, this was the when the Fed lowered rates for the third time in a row, and that's really when the market broke off and started rising at like what you could call a 45-degree angle. But anyway, so it made sense to put this trend line where I have it now, under the first actual dip that we've seen so far this year. And then look at that on Monday. It gapped below it, came down and retested like this level, which is pretty significant, I think. And so that may actually be a pretty significant resistance point on a rebound. Kind of makes sense, right? Because that was the lows prior to this little dip. And they're all within a couple of points, which is really interesting. All within a couple of points. So you can round it off and say, it's actually like 32.14, I think, is like the actual low. But anyhow, so here we are. Huge sell off, and amazingly enough, yesterday was actually a seemed like a bigger sell off than Monday. I mean, both days the market was down around 3%. I think on Monday it might have been down a little over 3%. Yesterday was right around 3%. And so last night, right, the low in the futures last night, let me look at my chart here, was 3091. Just for reference, I'm going to put a little, see if I can figure out where 3091 is here. I mean, it's basically like there. So that was the low. I don't know what color to make that. I'll just turn it into a different color from what I have here. And so yeah, it's always kind of interesting what happens overnight. A lot of times is Yeah, you'll see the market like the high. Let's see, the high here was 33.93, and I'm pretty sure that it got higher than that in the overnight futures. And so this little sell off here, that's in theory, if the futures retested the lows, it'd be down here. So we got a pretty good little rally off of the open today. There's a little gap up and then a pretty decent little rally, and so and now it's starting to fade a little bit, right? The market seems like it'll be pretty oversold here. Actually, let me go to a couple of different configurations here. There you go. This is what I was looking for. So look at this. Remember last week on the show I was talking about this negative divergence. Actually, it was this negative divergence right here in the RSI. That doesn't always mean anything. As a matter of fact, there's been quite a few times in the past where you see a negative divergence on RSI and it doesn't mean anything. Like this one, right? There was a negative divergence when the market hit a high over here, and then it hit another high here, right? And then of course we got the little sell off, and we hit yet another high. Although interestingly enough, and I'm not extremely proficient on this, but you could kind of say that you've got two negative divergences there, but of course that's all kind of after the fact, really. Be honest with you, but I did actually point that out last week when I was here about how the higher high in the market, didn't make a higher high in the RSI. But that's not really the point. Why I came over here is to show you how the RSI is poked below 30 yesterday, right at the close there, and so the market went from literally being overbought to extremely oversold very quickly, which is no huge mystery, right? Get a sell off like we saw. I mean, a couple of 100-point down days in the S&P. I mean, yesterday was, I think it was just under 100 points, but it's pretty amazing to see the S&P down 100 points in a session. And so amazingly enough, I did the math on the futures, on the S&P futures, right? And so from the all time high print up there at and I forget what it was, like 3390 something, almost 3400, not quite 3400, but down to last night's low there, 3091, 9%, like right on the nose. And so there's been a 9% correction, pullback, I guess you could say. Maybe 10% is a correction, right? So we've seen 9% in the futures. Now, of course, the regular session market, I believe, was like about 7%. So I haven't done the math, but anyway, so here we are. We're oversold, and we'll take a look at another chart here. And here's something else that's kind of interesting. Yesterday and even today, um, I mean, we went from pushing the top of the Bollinger Bands, right, like riding up the upper Bollinger Band, to literally closing outside of it yesterday, and even this morning. This morning we poked up into it. We're still outside of it, so it's another extremely oversold condition. And so the market takes the escalator up and the elevator down, they say. And it's kind of amazing to me because it's amazing because this sell off, obviously, if you've been watching any of the financial news, sell off based on the fact that the coronavirus is spreading to all these different countries, and cases are popping up in different countries and that type of thing. But I mean, all that's kind of been known for a while, and it seems like the market, regardless of what happens with that, it seemed pretty obvious that with China being shut down, virtually, shut down for almost a month, that there's going to be supply chain disruptions and it's going to affect, a lot of stuff, right? And so that was pretty much known, and it's like the market shrugged it off. It didn't really matter, and then all of a sudden, all of a sudden, for some reason, they decided that, okay, there's going to be some problems. We're going to get an economic slowdown. And so it is what it is. I mean, over the years, we've seen lots of similar type, just sort of huge reactions all of a sudden, right? And I mean, there's no question this run up here, the market got extremely extended, right? And it was just sort of in its own little world, and so now it's sort of adjusted down, and even still, if you go back to the beginning of 2019, which, quite frankly, at the end of 2018, the market had a 20% sell off, right? I mean, and it happened quick too, right? The end of 2018, like the last quarter here of 2018, the market started selling off, and it got pretty crazy. But in December of 2018, and of course it doesn't look nearly as dramatic on the chart now since we've made this move. But basically, you had a 20% sell off, right? They don't call it a bear market because if you take closing prices, it came to like 19% or something. But I always use intraday highs and lows because I figure, well, I like to use the print, like the highest print and the lowest print. And so basically, you did get 20% off here. And then of course, right at the beginning of 2019, the market turned around and had this, tremendous run, and ended up, about 30% for the year. And so giving back, after a 30% run and then some, giving back 7-8%, not a huge big deal, sort of normal. But of course, no one knows what happens from here. So to me, these are the key levels that I have marked on the chart here. Right, this was the breakout from sort of the W pattern, and amazingly enough, the three circles I have here are all Fed rate cuts, which sort of happened right around this breakout level. So that's the big breakout level. This is basically like, the end of the world support way back here, which if you go all the way back to the beginning of 2019, that's a pretty elevated level compared to, the bottom back here. So anyway, that's just basically, I'm not real big on fibs, like Fibonacci. So every now and then I'll play around and and draw some fibs on the. So I could draw fibs from. This would actually be a pretty logical place to draw some fibs from. So just for the fun of it, I'm gonna draw one just to see what it looks like from back here to the high, and so you can see it comes in just right around 3,000, a little over 3,000 would be a 38.2 retracement. Are we headed back down to test that breakout level in this area? Boy, who knows? That would be a lot of significant pain from up here, but in the big scheme of things, not a huge big deal. Theoretically, you could start a fib from this where this leg of the rally kicked off, right? In which case, yesterday's close was like spot on, a 50% retracement of that. So that's kind of interesting to see. So that's kind of this is a spot where basically the current rally kicked off, and the reason the reason is that right here is where the the phase one trade deal was announced, right? Because all of this craziness here, all this choppiness that we saw last summer, the big ups and downs, and even this sell off here was based on whether the trade deal was actually going to happen or not, right? And so, because that the market was moving on trade deal with China news for like a year. So anyway, you can draw fibs on the chart, and you can use that for kind of like support levels and that type of thing. And so hey, a 50% retracement of this latest move here, pretty amazing, right? So anyways, I mean that doesn't mean a whole lot going forward. So to me, the levels below, and so there's not a whole lot of support below other than the overnight low. And I guess you kind of got like a little zone. I'm gonna put it on here and then delete it. There's kind of a little zone of support, in this area here, 30, call it 30 70, 30 80. Support levels to me are always sort of zones, right? And so that one kind of matches up with that low and that high right there, this breakout high. So anyway, market extremely oversold. And here's the thing about super long range days like we saw yesterday is you're never really out of the woods. When you get a long range day like this, you're never out of the woods until you can take out the high, right? And that's a long, long way up. And I would be I'd be shocked if that high gets taken out anytime soon, right? I mean, I don't see that kind of rally because if you think about it, what caused the sell off the past couple of days here, right? What's caused this humongous sell off is not solved. It's still playing out, and there's people out there that are saying that Bernie Sanders being the front runner of the Democrats, could potentially have contributed to this too. Whether this is a coronavirus scare or something, I mean, who knows? It's just what happens with the markets. So anyway, interesting stuff. A lot can happen in a week, obviously. And so, I mean, we got a huge rebound going on right now, right? And so we've been seeing the ranges pick up. I mean, the market's up, S&P's up 37 points right now, which is 1.2%. Pretty amazing, to be honest with you. And once you see this range expansion, then things start to get a little bit dicier, right? There's just no telling. I mean, you could have a huge rally today, and then tomorrow you could gap up and have a big sell off. And so we're basically in sort of a news driven environment right now. Anyway, moving over to the moving over to like our positions and how the system itself has handled it. We had Wendy's got closed for earnings yesterday, and then there was a couple of other open positions. But look at this. This is pretty amazing. Typically zero open trades, no open trades. I mean, typically I come on and I do this show, and what we're looking at is the open trades, right? We go over the open trades and talk about, how they look and all that type of thing. Well, for the first time in quite some time, even that little dip that we had about a month ago, we had open trades. So anyway, long story short, there is no open trades, so I figured what we would do today is take a quick gander at the closed trades, which quite frankly is kind of an interesting exercise because one of the things that we'll see is how the system handled this type of sell off. And you can see these most of the ones that got closed yesterday, you can see the close date in this column. And so, the trades that got closed yesterday basically had already moved well past the trailing stop had moved past the trigger price, which is exactly what you want to see, right? So let's just take a look. Now, Wendy's is sort of an unusual, I won't say unusual case, but I mean this is exactly why we closed these trades ahead of earnings, right? Look at this gap down this morning. Here we have the whole market gapping up, and we got Wendy's with this crazy. And look, I mean, look at today. Let me go to a 5 minute and see what that even looks like. Yeah. So we got closed yesterday at the open ahead of earnings, and then faded down all day. Today we see some really wild sort of price action here. And that's exactly why we closed ahead of earnings. So, but here's the thing, that turned out to be a really good trade, right? Really nice. So minimum 8% move, just based on the trigger back here, and it started off pretty choppy. It really did. It's Wendy's is a pretty volatile stock percentage wise. So anyway, there you go. I think there's a trailing stop probably that I didn't mark on the chart here, but so we looked at it when it was open. It opened back here this day and sort of chopped around for a long time. The trailing stop just sat right there at 2150, and then finally after this day, right, got a little bit of a higher low here, and that trailing stop, kicked up a dime, and then as the price started moving up, trailing stop started moving up. So, and like I said, there's one here that I didn't actually mark on the chart. It was probably happened over the weekend or something like that. But so you get the idea of this is not really a good example of how the system handles a sell-off like we just saw, because this was going to get closed yesterday regardless of anything. Although interestingly enough, we used the open price. Like if a stock's going to come out with earnings tonight after the bell, we'll use today's open. If Wendy's was reporting, I believe this morning, pre-market, and so we always close it the day before, because you don't want to hold it through the earnings reaction. So this turned out pretty good though. The max gain here was 10.5%, and the minimum gain, just basically using the trigger price and yesterday's open, was 8%. So now this next one, this is a good example of why we do things the way that we do. So this thing triggered in back over here and continued, pulled back a little bit, but rallied up, blasted through the target. Everything was cool. The trailing stop was trailing up real nicely with it. And then yesterday, you can see how it just plowed through the trailing stop there. And so that's why we've always, in the documentation and whenever we talk about this, it's basically you just trail your stops up along with the system, and then something comes along like we had Monday or yesterday. It's just gonna take you out, and so this ended up pretty decent gain too, right? Pretty decent gain. Heck, the trailing stop was I mean, literally the trailing stop was up, only 25 cents under where the target was. And so it would have, if you sold half at the target and then got caught on the way down, can't complain too much about that. So let's see. Same with MCK here. I'm going down this list here. So going down the list, just taking a look at these. MCK turned out to be another one, same sort of thing. This one's actually kind of nice. The trailing stop had moved over the target, so pretty interesting. Pretty interesting how and here's the thing: you get these sort of we looked at a couple of them. I think I'll get to the one that's really dramatic here in a minute. But last time we looked at these stocks, it just basically just blasted off and had these huge, what I call parabolic moves up, and so inevitably, that comes to an end. And so when it's happening, you think to yourself, wow, it goes on longer and longer than you can imagine. Um, Look at this. Boy, this is a great example of why you want to use stops. And I don't know. I think KBH might have been coming out with earnings too. I'm not sure. Let me check that real quick. Yeah, KBH earnings, or no, I'm sorry, KBH. This is not earnings. I guess maybe for some reason the home builders are getting hit today. Stocks are still having the worst week since December 2018. So, yeah, weekly chart's going to look interesting, and the monthly chart's going to look interesting too. I actually want to look at those in a minute here, but anyway, so here you go. No matter what, having those stops in protects you from big sell-off. Oh, okay. This is the one I wanted to look at, but I forgot about this. This one also got closed right here ahead of earnings, and it was on Monday. I think it was on Monday. I don't remember, but there you go. Another sort of parabolic move higher, and then boy, they fall fast, right? The escalator up, elevator down, and so crazy market, crazy sort of market. And the thing of it is that the complacency was the complacency was pretty amazing that we saw last week, and obviously it's easy to say in hindsight, but we saw so many stocks. I mean, the one that really got me was Microsoft, right? Like Microsoft had sort of been going parabolic. So right, you had this uptrend, and then all of a sudden, Microsoft started rallying. Of course, back over here, the trade deal, when that main rally in the market started, Microsoft sort of started a different angle, and then here it just went parabolic, right? And so pretty amazing that it could just rally like that. And so literally, like, you can see what's happening here. All it's done right here, like this sell-off, has just sort of brought it back to kind of the original primary uptrend, right? And so that's what happens when you get parabolic moves in the market. But as crazy as it seems, and I can't remember if I believe this was earnings, like where it gapped up here, that high up there, like 190. That's when they released earnings, and so. But just like you've heard Jeffrey say this, and this is why we have parabolic stops, because stocks can go parabolic, and you think, wow, this is crazy, ridiculous, and then they just keep going, and so there you go. We had a lot of stocks that sort of went parabolic like that too. Apple kind of went parabolic a little bit here too, right? And like that spot right there ahead of the earnings. And so anyway, it is what it is. And so now, I mean, now you got a lot of really ugly chart patterns out there, right? Here's a look at the Qs. This is the trend line that I had drawn on the Qs right here, the Nasdaq 100, and it got, you know, over here it got pretty extended from like the primary trend and came back and touched it. Of course, that's where I actually do the trend line, but here you got extremely extended from the primary trend, kind of a parabolic move in the Qs, and then now sort of a little bit of an overshoot to the downside. So here's the thing. I mean, now you got the high from the in the overall market. You got the high from the last couple of days here. I'll just pull up the SPY. This is a big zone of overhead resistance. Big zone there. And generally, after you get a long range day, a couple of long range days. Monday's kind of unusual because of the gap down, but and the SPY is honestly sort of the best reflection of what happened intraday as far as the open and the close and all that, and so you can really see that gap. It looks a little bit different than the S&P. Anyway, so huge zone of overhead resistance, and it's a long way back up. So if the market has a big sort of oversold rally today, then they're going to get all excited on TV, and they're going to bring all the guests on and say, is the worst of the sell-off over? And everybody's going to be like, yeah, we think the market overreacted, but I would imagine that if you think about it objectively, when you get a sell-off like this, and it's reasonable to expect a bounce after literally like 4 days in a row. Market sold off significantly, and so it's reasonable to expect a little bit of a bounce. But the thing of it is that the problems, the reason that the market sold off, isn't going to get resolved anytime soon. And so now it's going to be a matter of the market trading on news sort of from day to day, and I never assume that the first big sell-off reaction low ends up being the low. I mean, you had people on Monday, literally like at certain times on Monday. I watched CNBC all day, saying that, hey, this is a good dip buying opportunity. It's probably you know, was probably the worst of the sell-offs probably over. You may see a little bit more downside, but yesterday was an amazing trend down day. I hadn't seen anything like that in a long time, where the market basically just an orderly sell-off all day long, right? There was no real like panic or like crazy down ticks or whatever. I think we might have seen a couple of like real huge negative ticks, but it seemed to be just sort of an orderly sell down. So in the very short term, you can see what's happening here. In the very short term, you got kind of you've basically got the ingredients for a pretty decent little rally here. It's going to be interesting to see what happens. Obviously, this thing can fail. I think that the sentiment now has changed a lot, and we got there's lots of overhead resistance now that's going to have to be chewed through. So, quite frankly, I mean, this is exactly as painful as it is for long-term investing portfolios or whatever. This is exactly what the market needed. The market needed a sell off. It needed sort of a reality check, and so now it's going to be interesting to see how it play. I have no idea how this is going to play out from here, but I would be I'd be extremely surprised to see it just rally back up and get in this gap anytime soon. So we got what today? We got two more trading days in the month, right? The other funny thing is that Friday up here was options expiration day, and I think I read somewhere that there was like more call options. There was more call options than there had been in a long, long time. So the market was really sort of, and it held up pretty well into OpEx, and then obviously we know what happened on Monday. So big scheme of things, let's look at the weekly chart here. It's gonna look kind of nasty on the weekly chart, no matter what. In the next 2 days, I mean, anything can happen. The market's extremely schizophrenic, but I don't really expect to rally all the way back up to, back up to the top of the range. But you never know. But the interesting thing is going to be this monthly chart. So, we got for 2 more days until the monthly chart closes, and that's going to be the thing to really look at. So to see if we have like this is like an outside reversal month, and so it's going to be interesting to see where they rally this thing up to. So anyhow, going back to the closed trades here. Let's keep going. We'll go down and look at a few more of these, and then I want to we'll take a quick gander at the pending trades, and then that's it. Not really that much to talk about when there's no open trades here to look at. So, all right. So anyway, let's go back and EDU. Where's my marks here? Yeah, there we go. Yeah, EDU. I mean, this was kind of a crazy stock because it had a huge sell off and then a V reversal and kind of caught it on the way back up and came up here. Tagged the target. Trailing stop had moved up here, and so it turned out this was probably from the area of the trigger up here to the target was pretty decent move. But it probably ended up as a wash. This one, this CRUS, this was nasty. This was a full stop out, right? I remember when this triggered in, I talked about it back here. I was a little, I was well. I think I mentioned that I didn't really like the chart pattern so well. Although it could have easily rallied back up with the semiconductors, but the way that it sold off here wasn't really the type of sell off that I know is the optimal type of sell off where you get like sort of a nice long duration orderly sell off. I mean, this was a mess, but anyway, long story short, this is what happens and this doesn't happen very often. Doesn't happen very often, but it does happen, and so absolute, worst case scenario is you get triggered in, right? You get literally no traction, and the stock rolls over, and you take a full stop out. So that's as bad as it gets. And this canopy growth, this was a similar type of thing, right? Although when we talked about this at the time, interestingly enough, with the pot stocks were they were sort of hot right here, and then obviously they got swept up in all the selling here. I never did. The trailing stop on this was let me see. Trailing stop had moved up to break even, right? So I didn't have that marked here on the chart, but that's where it got closed. It basically got closed right at break even, which is one of the benefits of having the trailing stop move up. Yeah, I hadn't marked that on there because it was the weekend when I updated it on Friday night, or when I ran the update on Friday night, I already had my trading platform shut off. So anyhow, yeah, no big deal. Um, this was kind of weird because it gapped way over the trigger anyway, and so we talked about that. Like this probably I can't imagine that anyone wanted to jump in this one up here. Although it was kind of viable. I did say it was viable here at 22.20, I believe. And so it was kind of off to the races here that Thursday. Looked like it could have done something, but quite frankly, I mean, it still doesn't look too bad here, right? If it can hold this low and maybe start to base out here, it kind of looks like it looks like it's turned the corner to me. So anyway, so let's see. We'll just work my way down the list real quick here. Yeah, this was another one that was kind of, triggered in. This is a kind of a sloppy chart, right? I remember talking about I didn't like the way this one triggered. It wasn't supposed to trigger in on a move like that. So that was kind of an anomaly. And so, here's the thing is like you see lots of stocks cycle through the system, and that's where, you can use a little bit of judgment because generally speaking, you can't buy them all. And so when you see something that's kind of an anomaly like that, probably best sort of pass it up. Citi, you know, Citi was another one that didn't get a whole lot of traction past the trigger price and basically failed. Not a huge big deal, but it did get stopped out over there for 50-cent loss. And I mean, look what's transpired since, right? So that's sometimes getting stopped out is a blessing. There's a lot. I mean, there's a lot of people out there that they jump into a technical pattern like this, and they think, okay, I'm gonna see what happens and sort of wing it. And so I think that obviously, if you've been around for the last 10 years, we constantly all we talk about where do you put a stop. So anything is tradable at any literally at any time, as long as you use a good stop loss, right? I mean, I can pull up any chart and literally say, okay, over today's high would be a reasonable entry point. And there's tons of stocks like this right now that yesterday's low is the perfect place for a stop. And so you could jump into, there's tons of stocks that you could just jump into. um, Over today's high would be a good spot, because a lot of them, they opened, they rallied up a little bit, they faded. And so if they can get a continuation, like if this stock's going to rally back up to the area of yesterday's high, it's got to take out today's high first. So this is perfectly tradable against yesterday's low, right? And with the caveat being that you have to be perfectly willing to like not be bothered if we get another big sell off, right? And you get stopped out. So that's always, to me, that's always the thing is, before I jump in a stock and take a trade, I want to figure out where's the stop going to go, and is it going to bother me if that stop gets hit? And so if you accept the fact that the stop could get hit, and that doesn't bother you, then it's a trade worth taking. So here's the same sort of thing. This one, and I'm working my way back now, because we only had four open trades. I'm working my way back to last week here on the closed trades, because we only had four open trades going into yesterday, and we had a few the day before. And so basically, everything's closed. There's no open trades. And we go back one more to, because I wanted to look at this. Here's another one. This one got closed ahead of earnings, right? And so look at that. Look at that earnings gap up. So we closed it this day, and then you just never know how a stock's going to react. And crazy, it looks like, I don't know what that was about, but this was crazy earnings reaction. And look, I mean, it's basically trading, you know, right back at the same level it was when it triggered in. A little bit. It's been on both sides of the trigger, because there wasn't a whole lot of time in between where it triggered in and where it released earnings. That trailing stop only moved a couple of times. It didn't really even, if it hadn't got closed here the next day, this trailing stop would have been up considerably higher. So anyway, there's a lot of really messed up, sort of broken charts. And I want to look at ExxonMobil, because if you look at ExxonMobil, like the weekly chart, I mean, you literally got to go back to the monthly chart on this. So I've seen some people talking about this, because the dividend yield's like 6%. I mean, the energy stocks have just been crushed. But amazingly enough, ExxonMobil is trading lower than like the 2008 sell off. And I mean, it's just pretty amazing. This is a monthly chart. So pretty amazing. And I mean, look at the sell off right here, just over the past 2 to 6, 7 weeks here. Just incredible. Look at that. A lot of the energy stocks. Um, there's your XLE. And there's a lot of people, have tried to pick lows in the energy sector, and it's just pretty amazing to see this. XOP is actually a better sort of representation here. I mean, it was already like super washed out, and then this last leg down here, is just incredible. So, and I honestly I don't know what to make of it, but to see these energy stocks, just wiped out like this is pretty amazing. And they've been going down for a long time. Well, the market hitting, all-time highs. This XOP here, which is, this is the S&P oil and gas exploration. The reason that this is better than XLE is because it's more equally weighted. And so there's the whole history of this ETF here. And so this sector is just absolutely just washed out. And I mean, and look at this. I mean, today, after this kind of sell down here, and so, anyways, what this is, this is kind of, I'm not going to say obviously in hindsight it was any kind of a tell, but, you heard that when China started shutting down, the price of oil started dropping because I guess, China uses a lot of oil, right? And so when they start shutting down their cities and people aren't out, doing stuff, that's caused a big sell-off in oil, and so the energy stocks followed suit. So anyway, a little tangent there. I wanted to look at the pending trades. This pending trades list is, I mean, we were down to like nothing on the pending trades, and all of a sudden now we're starting to. You can see just over the past few days on this sell-off here, we're starting to get some new ones hitting, and so I wanted to look at those. I wanted to start at the bottom of the list though, and this is going to be kind of weird too because here's the thing, and you guys know this. Let me just mark the trigger on here. Oh yeah, so check it out. Right, the current trigger price is, let's see, 921, or I'm sorry, 221. So it popped on the list this day. Right. So there we go. And it's kind of another weird one because see the system doesn't know. The system doesn't know how the sell-off actually manifested. All it knows is that the price has sold off. It's a stock that's in an uptrend, and the price is sold off from the high, X number of days ago. But it doesn't know that it wasn't like this kind of sell off or this kind of sell off. So anyway, long story short, it's kind of an anomaly. But so what'll happen is this will come down, come down, come down, come down, unless my guess is any further weakness, like one more down day, this will be gone from the list, right? So we're gonna see a lot of this. Let's see if I can find. Now here's one that looks actually pretty reasonable. Carlyle Group. Now this is a nice sort of orderly sell off, and trigger's still way up here though. Trigger's still way up here, but it will continue to come down. And so just sort of like two things will happen. Like back over here, you had a really quick sell off and then a reversal and then turned into a really nice trade back over here last October. So this sell off is a little bit more long duration than back here, right? I mean back here it was 4 or 5 days. So over here you're talking a few weeks, but same sort of thing. The idea will be, I go over this. You guys should have a pretty good idea, but the idea of these pending trades is that literally on sort of a day-to-day basis, what happens is that this trigger price slowly floats down, and then theoretically, if the price kind of formed a bottom and then started to reverse at out some point way out in the future. Now, you could get a move like this, right? Say it was going to move like that. So ideally, the trigger price, which would kind of make sense, would be like down around this level. So instead of being 3250, I'm going to mark that right here just so I have a reference point. 3250 is the trigger price right now. Start it on today. There's your trigger price now. Theoretically, this will come down, and then if you get a certain type of move, right? Say you chop around, and then it starts to move back up, or like say you're going to get like we've seen this, like a V type reversal or whatever. Then in theory, and of course this trend, I just arbitrarily drew this trend line. I should probably take that off because it kind of throws you off, but basically my guess is that this trigger price is going to, it's going to come down to like the area of the highs of the past few days on a lot of these. And then depending on what happens, like over the next week or so, right? Like if you get a high that bounces up here and you get another pullback and it starts to consolidate. So then, this thing could come down here considerably. And then you know, if you get a resumption of the uptrend, like what happened over here, it's the same sort of thing. Same sort of thing. You had the sell off and then the resumption of the uptrend. You got the sell off, and then if you get a resumption of the uptrend, it's going to be looking to jump in on the way up. And there's just there's no telling where the actual trigger price will be. And so when you see these trigger prices that are like way above the current price, just realize that they always start off like somewhere around the highs X amount of days back. So this one's, and this just came on the list like day before yesterday. That's why these trigger prices are like way out here. So, oh, Apple. That's what I wanted to look at. I mean, the rest of these, they don't really mean anything right now because the trigger price is so far away. And so this is the one to watch, right? Because Apple's on the pending list. And right now, the trigger is, I'm gonna put this up here, 325. I'm just gonna put that up there just for the fun of it because we're gonna follow this one really close here. So this is gonna be interesting. This is gonna be a good study on how everything works here. Let me zoom in a little bit. What I want to do is I want to get this. I want to follow the progression of the trigger on Apple while it's on the pending list. And so I'm going to start it from. I mean, This came on the list as of last night, right? Yeah, it says 225. So there we go. 325. A little bit higher than that. There we go. So this would be a fun one to sort of follow along on. So there's trigger price 325. I'm going to only extend it out like that because what's going to happen is that the price is going to do what the price is going to do, and then this trigger is going to, over the next couple of weeks or whatever, barring the thing just rallying back up to the highs and going through that trigger, this trigger is going to slowly sort of work its way down, and depending on what the price does here, they are going to meet sometime out in the future, right? The only thing that could throw a monkey wrench in that is in the unlikely event that Apple just like tanked from here, right? Then there's just like a certain threshold where a stock will just disappear from the pending list. But so this is the one to keep your eye on, and I would expect over the next couple of days a whole bunch more stocks will show up on the pending list. And the great thing about the system is and I know people get impatient to buy the dip on a big giant sell off like we just had. And there's nothing wrong with that, but the way that the system's designed is that the entries, I mean, everything that's happening is both a function of price and time. And you can get chopped up pretty good jumping in prematurely. I mean, you can jump into a lot of stocks, like I said, with basically playing off yesterday's low for a quick trade, but for a swing cycle, when you get a huge move down quickly, um, you can't just automatically say, okay, well, the swing cycle down is over, and now we're going to get a swing cycle back up. I mean, it just doesn't work that way. And so, like I pointed out, tons of overhead resistance. We could rally up for a couple of days, and then there could be another leg down, right? You got these overnight lows to worry about. The market, markets had a tremendous, almost, just an extraordinary rally. And so the first big sell-off that you get doesn't necessarily mean that it's all over. That happens a lot, right? The dip buyers jump in prematurely and they think everything's great, and then there's another shoe to fall, so to speak. So anyway, so that's that, and not a whole lot to talk about. So right now is with all this crazy volatility, and like I say, with another potential shoe to drop, the market, quite frankly, yesterday's low and that overnight low, those could hold for a while, right? But you want to see how it sort of bases out. The volatility is extraordinary right now, and so you see these big down days. Here's the thing: is that you got that big gap down and all that on Monday, and then you got people when the market gapped up yesterday. You got people thinking, "Oh, man, perfect time to buy the dip," right? And so they had a rough day yesterday, and so same kind of thing can happen, right? So there could be more shoes to drop. And like I said before, the reasons that the market sold off in the first place are a long way from being resolved, and so we'll just have to see what happens. But so, anyways, that's my levels, and not having any open trades is a pretty good place to be, quite frankly, with this kind of volatility, and so we'll just have to see what happens from here. So thanks for tuning in, you guys, and I will catch you here next week.